Gold price is stalling out on Thursday. David, is today anything really more than profit-taking short term?
Well, Alex, what's happened recently is we've rallied up from the 1531 lows a couple of times to about 1680. That's not really a random number. That's actually a Fibonacci retracement of a pretty significant decline. We dropped about $390. The first level of upside retracement actually comes in right at 1681. So that's why the market's had a little bit of problem getting through there recently.
So then where do we go from here? I mean, I know you've been saying we're in a 10-year bull market. We have another 3 years left to go, but we're waiting for that next leg up. When do we get there, and what's going to really trigger it?
Typical bull markets are 13 years in duration. This one started in 2001. Of course, we're 10 years into it here. The first 5 years from '01 to '06 were great, but most investors were not invested. By the time they figure it out, they come into the second wave of the bull, which is a corrective phase that lasted from 2006 to 2008. And by the time they all kind of give up on the idea of investing in gold, which was October of '08, that's when the third phase began, and we had a huge rally. So understand that we had a 34-month rally from 681 to 1920. You cannot correct a 34-month rally in 5 weeks. So investors need to consider that we should have multiple months of consolidation, and that's something I talked about in August.
So with multiple months of consolidation, what kind of levels does that mean? Does that mean we're going to trade around the 1680 level?
No, I think we're likely going to be in a top range of 1725, maybe 1770 on the high side, but I would say 1725 is more likely. There is very likely to be another corrective wave to the downside. Investors should not rule out the potential for this multi-month correction to have another leg down as low as 1440 or 1450.
So then when does gold price kind of regroup here and then really have that next bull leg up? And then how high do we go from there?
I think I would like to see some type of a retest anyway of the low 1500s to make me feel real comfortable. I think the current uptrend looks a little bit weak, and I think there's still potential of a downside. But what you should look for is roughly at least 7 or 8 months of total consolidation before we can go past the old highs of 1920.
All right, but in the meantime, investors really need to brace for a long 7 or 8 month correction. Thank you so much, David.